Hello and welcome to today's trade of the week on Monday, the 6th of June. We've had a very quiet week with a long UK Queen's Jubilee weekend and also European markets being shut on Monday because of the Pentecost holiday. But let's look at last week's trade of the week, which was to go long the US dollar basket at 101. And when we look at the daily chart, we can see that the reason for this was a technical reason, and it had to do with three factors. The first being a 5-wave decline in Elliott wave terms, so a 5 minor wave decline here. And also the second being that we hit the 50% retracement of the entire advance seen since the end of March. And we expected a reversal to also happen above the orange line here, which is the 55-day simple moving average. So our trade of the week from last week was a technical trade, thinking that the corrective decline in the US dollar basket was likely to end, which is what has happened. And we wanted to go long at 101, just above the orange line, the 55-day simple moving average, and also this key support area here, which is the late April high from the 20th of April at 192. Unfortunately, our trade entry was at 101, and the basket declined to 101.10, so we wouldn't have entered this trade. But those traders who did still enter this trade, and so at higher levels would have made a profit of around 2.5 points here on this index. Since then, we've come back off again as the US non-farm payroll data on Friday came in stronger than expected for May, with 390,000 new jobs being added in the US economy. But let's look at today's trade of the week, which is to go long the S&P 500. The reason for it is, again, technical, in that we have seen a very nice bounce off the 3,811 late May low and have risen above the mid-May high, which incidentally last week acted as support. You can see that these lows here were made more or less where this high here was made. And we now expect the advance we saw since the end of May to continue. We've just consolidated last week and are currently heading back up again. So we believe that over the next few days, as long as we don't fall below the 4,074 low on this daily financial back from last week, we should be heading back up above the late May high at 4,203 towards the 55-day simple moving average at 4,263, and then also targeting the May highs around the 4,300 area. So our trade of the week is to go long the S&P 500 at 4,155 at current levels, with a stop loss at 4,070 and an upside target at 4,300.